welcome to my channel. This video is a part of NISM Mutual Funds tutorial. I've already uploaded 4 chapters of this playlist, so I request you to watch those videos. You can get the link in the description box at the end of this video as well as on the I button. For this one, we would be discussing chapter number 5, that is scheme related information. If you like the video, do hit the like button and please do not forget to subscribe to my channel. Show some support as an appreciation. So let's start with this one. So this chapter is all about scheme related information. And when you hear this line as an investor or everywhere, we must have heard this line, we all have. So it is mutual fund investments are subject to market risk. Please read all scheme related documents before investing. So in this line, we are focusing on scheme related documents. So this chapter is all about scheme related documents. When this line is referring to these documents, what are those? We would be going through the same documents and we will try to understand how it helps the investors. So we can just divide it in two parts. Okay, so first will be legal, what you can also call as mandatory documents, and the second will be non-mandatory documents. When we talk about legal mandatory documents, which are very important, very crucial as for your exam purpose also, as an investor also, if you are learning about this one particularly is very important, that is legal mandatory documents. So these are three. First one is scheme information document. Second is statement of additional information. And third one is key information memorandum. So all these three are legal mandatory documents. And when we talk about non-mandatory documents, so that is only one which we refer as fund fact sheet. So I have kept that in the last slide. We will be learning about that. So that's only one fund fact sheet. Other than that, these are the three which are legal mandatory documents. And just giving you an overview. So scheme information document basically gives detail of the mutual fund scheme. So when we are talking about any particular mutual fund scheme and you want more and more information related to as much as possible related to that scheme, so you can rely on scheme information documents. It would be telling you everything. And we would go in details about the content of these documents. Second is statement of additional information. So here you can get statutory information about the mutual fund or AMC. So in the first one, we are getting details about the mutual fund scheme. In the second document, we are basically focusing on this mutual fund or AMC. AMC, as I already mentioned in my previous videos, AMC is asset management companies. It is a mutual fund non-banking financial company from where the operations of day-to-day management are handled. So AMC, we can get all information, mandatory information related to AMC from statement of additional information. Other than this, there is the third one which we call as key information memorandum. It is like a summary of both of these documents. So if you have not gone through these documents, you can rely on this single one and you can get a summary and an idea of both these SID and SAI. So this would be a little bigger documents with around 100 to 200 pages it will range. And one thing you need to note over here is that when we talk about scheme information document and statement of additional information, both these documents are prepared in the format prescribed by SEBI and submitted to SEBI. So just note this, that these two documents are prepared in the same order and it need to be prepared in the same order as it is prescribed by SEBI. So, and then later on it is submitted to SEBI as well. So we get an idea that SID and SAI together are primary source of information for any investor. It can be downloaded from AMFI website. It is available on AMC's websites, mutual fund websites. So it's like a primary source of information that should be easily available to the investor. and that too in very simple language, in concise way, clear way, easy to understand, with the help of graphs, pictorial representations, no technical language to be used, and whatever the words are being used, that need to be explained as well. So if there is mentioned like NAV, then it should be explained what is NAV, so that investors get an idea that what does NAV refer to. SEBI does not approve or disapprove the scheme related documents. So we learned that the documents that are prepared, whether we talk about scheme information document or statement of additional information, both are prepared in the order prescribed by SEBI, and later on it is submitted to SEBI as well. So that submission is for SEBI's observations. SEBI will observe, SEBI, that is Securities and Exchange Board of India. It is regulatory body of all the capital market, share market, mutual funds. So SEBI has to go through the prescribed format in which it has been submitted, the documents have been submitted, and if there is anything missing, anything has gone wrong, it will give its observation. So it does not approve or disapprove, it just give its observation related to the scheme related documents. Now, when the SID and SAI, it is in draft format, it means it is not yet available to the investors. It is just being drafted as public documents. So at that time also, it is available on SEBI's website. So it goes through a particular order, right? So when a new fund is being offered in the market, a new fund is being launched in the market, before that it has to first go through the SEBI's approval, and in that term, these documents also, it is in drafted form. So SID and SII both are in drafted form, and it is available on SEBI's website. Once SEBI's observation and approval has been taken, then it comes in a proper final document form, and that time also it is hosted on AMFI's website. AMFI, that is Association of Mutual Funds of India. So we have studied about AMFI as well in our previous chapter. So once it is finally incorporated by SEBI's observation, it would be available at the AMFI website as well. And then when the issue open for the new fund, these documents will be easily available on mutual fund websites, AMC's websites for download for all running schemes, and for the investors it would be easily available. So it is going through like all certain process. It would be available on SEBI's website, it would be available on AMFI's website, and very easily it would be available wherever as an investor you have invested through, for example, you have invested through SBI Mutual Fund. So you can get it on their website, so that is sbimf.com. If you have invested through SDFC Mutual Fund, so you can get it on their website, sdfcfund.com. So in this way, like, you can easily visit websites and you can download these documents from there. It would be available in a section called downloads, and there you would find the SID, SAI, KIM. So from there you will be having an option to download and go through it. After that, you are supposed to make an investment decision. This is how you are supposed. Generally, investors don't do that. They just rely on the information provided in a very simpler way as a fund fact sheet. So they just rely on that. But SEBI, it has mandated that these documents should be provided, so that you get as much details as possible and there should be no confusion regarding mutual fund investment. Now let's go through the content of this SID, that is Scheme Information Document. So I said that SEBI prescribes a particular format that need to be followed by each AMC when they are presenting this SID. So the format is this way. First, there should be table of contents, then there should be highlights. Later on, there would be introduction about the scheme, which would contain risk factor, provision, special consideration, due diligence certificate and all. After that, there would be information about the scheme. So here you can get all the major information about the scheme, like name and type of scheme, investment objective, asset allocation pattern, investment portfolio, fundamental attributes, benchmark, fund manager, investment restriction, past performance, And then there would be units and offer detail, fees and expenses, rights of unit holders. We already learned about all these things. Like, I don't think any single term need to be explained. But if you have any problem with any of the term, you can always ask in the comment section of this video. I will be happy to reply about that, because we have already covered this in previous chapters, so I'm not explaining it over here. Rights of unit holders, we also learned about this, like there were rights to grievance redressal, right to pledge mutual fund units, examples are penalties, litigation. So all these information in a structured format would be there in scheme information document. Let's now come to scheme suitability. So scheme suitability comes with risk in the scheme, type of the scheme, investment objective, asset allocation, investment strategy. Again, I want to request you that you can just visit that website called sdfcfund.com, so that you get an idea. There in the download section, you can find SID, that is scheme information document. You can find SAI and KIM over there. So just download it and go through it. You'll, if you want to get deep understanding, you'll get an idea that all the contents are mentioned over there and how it is presented. For your exam purpose, you don't really need to go so deeply. For your exam purpose, whatever I'm presenting in this video would be enough for your understanding, and you'll be easily able to clear your exam. But later on, if you want to build up your knowledge, you just go to those websites, you try to download and understand. Now comes the scheme suitability. So one scheme has the different suitability factors that need to be mentioned. That's regarding the risk involved in the scheme. So it could be low risk, it could be high risk, moderate risk, that need to be represented as a pictorial format through riskometer, which we have generally seen. So that is how risk in the scheme is need to be represented. Then the type of scheme, whether it is equity, debt, hybrid, which category the scheme belongs to, that need to be mentioned. Investment objective, could be capital appreciation, it could be regarding children's education funding. There could be different objectives for which schemes have been provided. Asset allocation also represent, like for equity schemes, 60% will be invested in equity, 40% will go in other instruments. So asset allocation needs to be prescribed, that where the major proportion of the investment amount is going. Investment strategy, will it be passive, will it be active investment strategy? Like generally for index fund, what is followed as the passive investment strategy, they just follow the index and not much changes is required. However, for schemes which involve passive strategy like equity schemes, focused fund schemes, so in those kind of scheme, the investment strategy has to be different. It has to be more active. So this is how investment strategy need to be mentioned as well. Now this is riskometer I was talking about. So you must have seen in this on mutual fund websites. It is very simple, easier form of representing the risk involved in one particular scheme. So here you can see it shows from low to high. All right, and this it represents where the risk lies. So if it is moderate, it would lie over here. It can be low, it can be high, it can be moderately high, moderately low. And here you can find the level of risk and the definition. So if it is low, it is like low risk involved. If it is moderately low, it is like your principal amount, that is whatever you have invested, that would be at moderately low risk. If it is moderate, and so on. So it is giving you all the definitions and such examples. So where low risk is involved, it is generally in liquid fund, overnight fund, that is simply for a very short period of time. So there is not much higher risk involved in that. And that too, they invest in money market instruments, debt instruments, so that are not riskier assets. Then moderately low, it could be fixed maturity plans, FMP, what we say, capital protection plan, which are generally close-ended schemes. So close-ended schemes are then over here having moderately low risk, because for a certain holding period you need to be invested. After your investment gets matured, then only you can sell and redeem your money. So this is how FMP and capital protection works. It is also mentioning example of moderate funds like income fund, conservative monthly income plans, then moderately high schemes like ETF, index fund, solution oriented, then seriously with the high risk where the principal is involved, that is sector fund because it is not diversified. It is generally focusing on one particular sector. So maybe it could be technology fund, it could be banking fund, so that is particularly focusing on one particular sector. So if the sector performs well, your money will grow. If the sector is not performing well, your money is at high risk. So this is how riskometer gives a definition, and it shows that where you are making investment. Now some more contents of SID, that is scheme information document. So in this chapter number 5, your major focus is on one single document, that is scheme information documents. It is having so much of content that it has put through. And here it is one more point, that is buying units of scheme for mutual funds. So SID, you will also get details like if you as an investor want to buy units of scheme from mutual fund, it means like you want to invest your money into mutual funds, you would be allotted the units. The same way it is you are saying like you are buying units, it's just the same meaning that you are investing your money in mutual fund. So how you can go about it? If it is an open-ended scheme, you know that open-ended scheme, you can buy, you can make an investment during new fund offer as well, and after that as well, you as in continuing investment at the applicable NAV. NAV is that market price. We already learned that NAV is net asset value, what we refer as market price of the mutual fund. I'm really sorry for this disturbance, like the construction work is going on here, and I will try to, I just don't know what to do in this, but okay, let's just focus over here. So open-ended scheme, if you want to buy units of this scheme, you can easily buy even during new fund offer, even it will continue throughout the investment period. So new fund offer period. This is generally when one particular fund is launched in the market at initially. So initially at that time also you can make the investment. After this fund period, this NFO period is over, then after also you can make the investment. That is what open-ended schemes are like. You can anyways make entry and exit all along during the period at the applicable NAV, that is current market price of that particular scheme. But when we talk about close-ended scheme, can you do the same thing? It won't be same. For close-ended scheme, you can only buy units, you can only make investment during new fund offer. After that, you can't make investment. You would have to hold it for a certain period of time, and once it get matured, then only you can redeem your money. So that is for close-ended schemes. In that way, as an investor, if you want to invest in close-ended scheme, you have to buy the units during NFO only, so during new fund offer only. And this one I gave you an example, right? Close-ended schemes like fixed maturity plan, capital protection plan. Open-ended schemes were like sector fund, focused fund, then equity funds. All those were open-ended schemes. In case of interval scheme is like these are close-ended funds, but for certain period of time these would be open, and that certain period we call as specified transaction period. So for 15 days it will be open, and then again it will get closed. So for 15 days you as an investor you can buy and sell in that fund, but after that again when it gets closed you have to hold it till the maturity at the and during this transaction period you can get it at applicable NAV. Okay, so this is how scheme information document guides you, like how you can buy units of a particular mutual fund scheme, how you can invest. In the same way, it also guides you on how you can apply for it. So the first time when the new fund offer is being launched in the market, there is certain application process required for the investors. So it guides you through the application process as well, both SID and SAI. So this would be also included in scheme information document as well as the statement of additional information. In both of it, you can get an overall idea of application process for new fund offer presented for any particular mutual fund scheme. Now it would present you with application form which you have to fill, and then you can submit. What all things need to be filled, that would also be mentioned over there. And there would be payment mode, how you can make the payment, what would be the mode of transaction, all that would be clearly mentioned in the scheme information documents. There would be certain mandatory information required by your side, yours as an investor side. So you have to give your PAN number, that is your verification number, bank account details. There would be certain KYC norms. So all these details would be taken from you as well. So SID contains an information that how, if you want to buy, if you want to invest, if you want to apply for mutual fund scheme, what you need to do. So it is guiding you to throughout a clear procedure on how you can move forward. Specific regulation for a special category. Okay, so there is some different regulations for NRIs, for minors, and for PIOs. So for that also it would mention what regulations are different and how to be followed. There would be some additional informations in this SID that is related to transaction price. Your purchase and redemption price will depend on the applicable NAV. NAV again, net asset value, the current market price of any particular mutual fund scheme. And whenever you are making purchase, whenever you are redeeming your money, so you that is at the applicable NAV when you are making that transaction. Along with that, cutoff timing also matters, and right now cutoff timing for most of the schemes is 3 p.m. So if you do the transaction before 3 p.m., the same day NAV will be applicable. If you do transaction after 3 p.m., the next business day NAV will be applicable. So this is how cutoff timing also matters. So it tries to give investors an information that when you sell, when you buy, what would be the price at which the transaction will take place, so that you can get an idea that what money you have invested and what money you are getting back. So is it true? Is it fair or not? It will give you load structure. If there is any exit load applicable on redemption price, you must see it. For example, I know this opportunities fund are there which generally have exit load of 15 days, which is very less. So for 15 days, you need to hold your money in that scheme. Of course, before 15 days, you can make an exit because it is open-ended scheme. But you would be charged certain fees. You would be charged certain percentage of your investment amount. So exit load is that what you are charged before you are redeeming, because you are redeeming before the exit time. But after you redeem, for example, I was talking about opportunities fund. So after you redeem, if you are redeeming after 15 days, there would be no exit load applicable. So scheme information document presents you with that idea as well, that what would be the exit load in particular scheme, when you can redeem, and what charges you would have to pay in case you redeem it before time. It will present you investment limits, that what would be minimum SIP amount which you can invest, what would be minimum lump sum amount, maximum amount what could be to be invested. Plan and option is also very necessary, and I generally advise to all the investors that you should go for this direct plan, and you should choose the growth option for maximum return on your mutual fund, because for generally regular plan and dividend option, you are missing on the expenses which are making your profits low. So plan and option need to be mentioned in scheme information document. SID won't tell you that which one is nice, which one you should choose. No, it can't make any such declaration. It will give you an overall idea. You need to justify that what you need to select as a scheme, where you need to invest. So it would give you an idea for a particular scheme, whether it is regular or direct plan, whether it is growth or dividend option. Modes of transaction, it will mention through internet. You can also make transaction going physically to the AMC's branch. It could be through distributor or the stock exchange. Then special product and facilities would also be mentioned in scheme information document, like SIP, which is systematic investment plan, in which monthly or quarterly you are investing a certain amount. SWP, which is systematic withdrawal plan. If you have invested money and later on you are monthly withdrawing or quarterly withdrawing certain amounts, so that is SWP. It could be STP, systematic transfer plan, as such, in which there is transfer between the schemes. You can switch from the scheme, you can modify, there would be dividend transfer plans. So all these special product and facilities, investors are made aware that what all benefits they can avail, what all benefits they can choose. Sources of information additionally is provided in the form of account statement and periodic disclosures to the email registered by the investors. So this would also be mentioned in SID, that account statement investors would be getting monthly on their registered email. There would be periodic disclosures of their portfolio as well. Now let's come to statement of additional information. So this is our second important mandatory legal document which we were talking about, and this contains mostly about the mutual fund, the AMC, the parties involved in that. So let's see. Constituents of the mutual fund. It will contain details about the sponsor, the AMC, the trustee, custodian, RTA, auditor, accountant, collecting bankers. So this is so much of additional details that you are getting. We read about all these components, like sponsors are the promoters who invest their capital. If you haven't gone through the previous chapter, again I will request you that just go and watch all the chapters and you'll get a better understanding about all these terms, because I've already covered all these. So these components would be described and you would get an idea if you are investing in one particular scheme. Who is the sponsor related, who is AMC related, who is the trustee, who is custodian, who is RTA, the auditor, accountant. You'll get all details in this statement of additional information. It, as I said, that along with SID, SAI also guides the investors on how they can apply for a particular scheme during new fund offers, so how they can make application. Rights of unit holder. So rights of unit holder, we learned this in previous chapter as well. There are certain rights like right to beneficial ownership, right to inspect documents, right to pledge your mutual funds unit, right to appoint nominees, grievance redressal, etc. So all these rights that an investor is having, all that would be mentioned in statement of additional information. Investment valuation norms. So how the value of your investment is calculated, because when you are investing in a scheme, there is a whole portfolio in which your scheme is investing. So there would be different companies. Now that different companies, their shares are trading at different prices that need to be valued. So there is a valuation process called mark to market process which is followed, that is standardized by SEBI, and it is followed, and the details about it is mentioned in SAI. There would be information about tax, legal and general aspects. Investor grievance, there would also be detail about how an investor can register a grievance. So about this also we learned in previous chapter. It was through score system, it was through SEBI, the score system which is provided, that is website for grievance redressal of the investors, ultimate help which is can be provided to the mutual fund investors. Now you can see that in SID, scheme information document, we get all the idea about the scheme. So whether we talk about the expenses related, the name of scheme, the type of scheme, the investment objective, asset allocation, investment strategy, their portfolio, we get all the idea about the scheme. But when we talk about statement of additional information, we get an overall idea about the rights of investors, the components of mutual funds like sponsors, AMC, trustee, application form, the valuation norm, tax and legal aspects. So a little difference you can find over here, that together if we as an investor are going through SID and SAI, we are getting the whole lot of information about our investment. We get total information including the scheme information, including the components information, including our rights, our the processes, etc. So you need to keep in mind generally what are the contents in these two particular documents. Now let's come to key information memorandum. So it is like a summary of SID and SAI. There is no much difference. It is just the same components but in summarized form. And again, it is presented to the investor to make a decision on the suitability of the investment for their needs. As I mentioned that SID and SAI would be a long document, so it would be having so much of contents. But this key information memorandum, this would be a short one. It would be a summarized form. So if the investor haven't gone through all those documents, they can just go through this KIM and they will get an idea about it. And as per SEBI regulation, every application form need to be accompanied by KIM. So this line, just keep in mind, it can be important for your exam purpose. So SEBI has regulated that with every application form, KIM should be there. Now, content of KIM, you'll find a mix of SID and SAI. So just go through it. Name of AMC, mutual fund, trustee, fund manager, scheme, date of issue, opening, issue closing, investment objective, risk profile, asset allocation plan and option, benchmark, policy, performance of scheme, expenses, registration. So you can just get an idea that it is a combination of SID and SAI that is presented to you in form of KIM, key information memorandum. So it is trying to point out the key things. The name itself is suggesting what is it meant for. So key information, what all are major information in SID and SAI, it is presenting you that. Now let's see about updation of scheme documents. Here you need to keep the whatever these months and due dates are there, you need to keep that in mind. If a scheme is launched in first 6 months of the financial year, okay, so financial year is in our country, it is generally from 1st April ending to next year March 31. So financial year, whenever you see this, you just get an idea that it is from 1st April to 31st March. Now, if any scheme is launched in first 6 months of financial year, first 6 months, so it would be like from April 6 months. So May, June, July, August, September, it can go through there. If a scheme is launched in that period, then the first updation of SID, that is scheme information document, it should be within 3 months of the end of financial year. So by the end of financial year will be ending on, for example, if the financial year was for 2019, so it will end on March 31st, 2020. And it would be due within 3 months. So from March, April, May, June 2020 maximum, it is the time by which the updation of SID should be done. Okay, so you get an idea about it. Like scheme is launched in first 6 months of the financial year, then the first update of that scheme information document will be due within 3 months of the ending of financial year. So financial year end on March 31st. So if it is the year 2020, within 3 months would be June 2020 would be the maximum by which the SID should be updated. So this is how you need to understand this whole statement. Now, if a scheme is launched in the second 6 months of the financial year, so if it is like in the second 6 months, then the update would be due within 3 months of the end of next financial year. So it would go in June 2021. Okay, so just keep this in mind and you'll get an idea. Financial year, take a year as financial year. Like in this statements, the year that is mentioned is from 1st April 2019 to 31st March 2020. And this is how it works. So it is like you can see in at least annually it is being updated. And the due timing is by the end of financial year, 3 months by the end of financial year. Now, SID is to be updated every year. We got an idea that it is being updated every year annually. SAI, again, it has to be regular updated, and that is by the end of 3 months of every financial year. So regular update has to be done by the end of 3 months of every financial year. So the same concept, like this update is to be done annually, it would be updated annually. But the time given is like when the financial year is ending, that is on March 31st, 3 months extra is given, April, May, June. So till June it can be updated and provided to the investors for information. So updation need to be done by the end of 3 months from the ending of financial year. The same applies in the above case as well. KIM is to be updated at least once a year, so this is also being updated annually. As in case of SID, KIM is to be revised in case of change in fundamental attributes. Okay, so just keep in mind that once a year annually these documents are being updated, and by the end of financial year, after 3 months, time is provided for the updation. So extra 3 months is given after the ending of financial year. And this also you can keep in mind that if it is first 6 months, it would be due within 3 months of the financial year. If it is the second 6 months of the year, then it would be due in the next financial year, that is 2021. Now let's have a look at some other mandatory disclosures. So current value of investment would be disclosed. It is calculated as unit balance into current NAV. So whatever is the NAV prevailing at the market into whatever units the investor are having. That is the value of investment of any particular investor. Disclosures of daily NAV is necessary. In case of open-ended scheme, the NAV is calculated for all business date, while if it is a closed-ended scheme, the NAV will be calculated at least once a week. Now, portfolio disclosure is also done, and it is done half yearly. An email is sent within 10 days from end of each half year. So portfolio disclosure, this is done half yearly. Let me just remind you that scheme information document, statement of additional information, key information memorandum, all three are annually updated. Portfolio disclosure, this is done half yearly. Okay. Disclosure of NAV, this is done every day. And we are talking about business days. We are not talking about Saturday and Sunday when it would be closed or any festival days. We are considering the business days. So disclosure of NAV is done every day. Current value of investment, it is unit balance into current price, current NAV. Okay. Financial disclosure. Now again, this financial disclosure, let's see when it is done. The mutual fund shall, before the expiry of 1 month from close of each half year, March 31st to September 30, shall display the unaudited financial result on AMC website. So this is how financial disclosure need to be done. Disclosure of total expense ratio is also done on daily basis, because NAV is to be calculated daily and expense ratio would be deducted from the NAV to show the real figure, and thus it is also done on daily basis. Annual reports is published every financial year, and maximum it can take 4 months from the end of financial year, not more than that. So that was all about disclosures, additional disclosures that need to be done in terms of NAV, in terms of documents, etc. Now let's talk about this non-mandatory disclosure. Okay, here it should be non-mandatory document. Okay. So we talked about in the starting of this video, I talked like it can be divided into two parts. The scheme information document, it could be divided as the mandatory one, the legal ones, which was consisting of three parts, that was SID, SAI and KIM. And the second would be non-mandatory, which consists of only one, that is fund fact sheet. So this is not mandatory, this is not legal, but anyways it is published as monthly fact sheet. It is a market practice which is being followed by all mutual fund houses, and this gives basic information in a very summarized form about all the important things like inception date, the AUM, current NAV, benchmark, pictorial depiction of the fund management style, sector-wise allocation, minimum investment. So all these things were the necessary things which are there. It would be presented on the website through fund fact sheet, and it would be in a very summarized form, just one page maybe. And thus it is presented by the fund houses, so that it does not become complicated for the investor to download all the documents and then go through all those details in detail. If an investor just want to get a minimum idea about all these things, so they can just depend on this fund fact sheet and they can see all these things over here. Okay, so this is a non-mandatory document. Okay, here I have attached this screenshot of this fund fact sheet. So this is how it looks. You can get an idea over here. It shows investment objective, performance, risk measure. I have downloaded this from morningstar.com, and this gives you about any fund. You can get the fact sheet over there. So it is showing you the benchmark, it is showing asset allocation, the top holdings over here, the risk measures, Sharpe ratios, risk involved, whatever it is, return percentage, all that it is mentioning over here. So this is how a fund fact sheet looks, and this one is for SBI Blue Chip Fund, and it gives all details. So if an investor does not want to go through lengthy documents like those, they can just go through this fund fact sheet, which is one page, and they can get an overall idea about the scheme. Now let's start with our MCQ. So the first question is, please read the scheme related documents carefully. Which documents does this line refer to? Option A, SID and audited balance sheet of AMC. Option B, trust deed and key information memorandum. Option C, SAI and fund fact sheet. Option D, SID and statement of additional information. So the correct option is option D, scheme information document and statement of additional information. Which of the following statement is true with respect to SID and SAI? These two documents are prepared in the format prescribed by AMFI. These two documents are prepared in the format prescribed by AMFI's Best Practices Circular. These two documents are prepared in the format prescribed by SEBI, that is Securities and Exchange Board of India. Each asset management company is free to prepare these documents in the format they desire. So the correct option is that these documents are prepared in format prescribed by SEBI. How often should the key information memorandum be updated? At least once a month. Option B, at least once every 6 months. Option C, at least once a year. Option D, it need not be updated after it is issued once. So the correct option is option C, at least once a year. As per SEBI guidelines, how often should the mutual fund schemes portfolio be published? A, monthly, B, half yearly, C, annually, and D, never. So we learned that it is option B, half yearly. Which among the following is not a statutory document? A, fund fact sheet, B, statement of additional information, C, scheme information document, D, key information memorandum. So the right option is option A, fund fact sheet. Current value of investment can be calculated as unit balance in the investor's amount into current NAV. State whether it is true or false. So option A, true. Option B, false. Correct option is option A, true. If a scheme is launched in the second 6 months of the financial year, then the first update of the SID is due within dash months of the end of next financial year. A, 6 months, B, 4 months, C, 3 months, D, 2 months. And the correct option is option C, 3 months. Thank you. So this was all for this video. I hope you liked it. Please do subscribe. Please do like the video if you really liked it. If you liked the content and and my efforts, please appreciate and share with more and more people so that my channel can grow. Thank you so much, and I would be very happy to provide you with the same contents, useful contents. Thank you so much.